Bill Ackman says bond market is misreading the Fed, inflation is out of control and Fed may ramp up hawkish commentary. Bill Ackman, a billionaire investor and the founder and CEO of hedge fund control company Pershing Square Capital Management, tweeted these days that the bond marketplace is misreading the U.S. Fed. According to Ackman, this is probably due to Fed Chair Jerome Powell's conversation style and a few wishful wondering at the part of buyers. Ackman brought that inflation is out of manage and inflationary expectations have ended up unanchored. The Fed has sooner or later come to this consciousness and has determined to behave, and is gambling trap up, Ackman commented. However, Powell does no longer stumble upon as someone who desires to visit conflict in opposition to inflation. He seems uncomfortable and reluctant, nearly apologetic, about elevating fees. Ackman brought that every time Powell speaks unscripted in Q&A, the marketplace interprets his statements dovishly. To restore his message, the Fed governors thereafter exit to make clear. To wit, Kashkari, a historic dove, on 6/17 unveiled his dot plot which shows FF at 3.9% through YE and 4% with the aid of YE 23. He says 75 bits per second in July and 50 bits per second thereafter, till inflation is well on its way to 2%. Then on 6/18 Waller mentioned he helps 75 bits per second in July and said the Fed is all in on preventing inflation. And then these days Bowman, who speaks hardly ever but contains extremely good import in light of the rarity of her public statements, mentioned, I assume that an extra price growth of 75 foundation factors could be appropriate at our next assembly in addition to increases of as a minimum 50 foundation factors inside the following couple of next meetings. And Bostic closing week said the Fed would do something it takes to bring inflation again to 2%. Despite the above coordinated remark, the bond market has left out those statements, leading to a big decline in short time period quotes since the Fed assembly. Ackman predicts the Fed and Powell are extreme approximately inflation, and Powell does now not want to be referred to as a worse chair than Arthur Burns. He believes the Fed will raise rates 75 bits per second or extra in July and 50 bits per second or more in subsequent meetings, and received it pause until it's miles clear and convincing that inflation is headed returned to 2%. The hedge fund manager mentioned a federal funds fee of 5% subsequent year is within the playing cards. He brought that whilst the recession word is on anybody's lips, recession speak received it deliver down inflation. Consumers and groups are nicely capitalized and underlevered, he provides. Banks are hugely underinvested with one of the lowest ratio of deposits to loans in history. The capability for a future recession won't prevent the Fed from elevating costs now. Ackman finishes with the aid of announcing the Fed has a credibility trouble because the bond marketplace flat out ignores Powell's and the governor's statement. This should be regarding to the Fed as managing inflationary expectancies as essential to controlling inflation, he stated. Expect even extra hawkish observation until the bond marketplace wakes up.